Hey everybody, this is Patrick Zielbauer from Infinity. Welcome. Thanks again for taking a look at the YouTube channel here today. I know it's been a little while since my last video, but something has started to happen again lately that I really want to touch on, and that is a lot of choppy markets and a lot of comments from customers and prospective customers about choppy markets. We're sort of entering this time of the year where things tend to slow down a little bit. Now, we all remember Christmas Eve last year, okay? So giant, drop in the market. So it's not like you want to let your guard down, but sometimes you do see just overall decreased interest. There's not a lot of news politically, which is kind of ironic. The economic data has been relatively muted. The Fed conversation has kind of quieted down. So there's just sort of this lull happening right now. And I want to stress that the MPD line sort of idea that we cover a lot in this YouTube channel is most valuable, in my opinion, in this sort of environment. So the environment I'm talking about is one where there's not a lot of decisiveness. The market tends to bounce around in a small range throughout the day. And I think that's really where the MPD line idea comes into play. So what I'd like to do is show you here briefly in AT charts how you can add the MPD lines and how they're created. And this is something you could do immediately on your own. There's no software to download. It's super easy. There's not a lot of configuration. Anyone can do it, and from any device, from that matter, including an iPhone or a Mac or Android device as well. Okay. And on that note, I actually use this program on Chrome. I use an iPhone 8. It works great. It's super fast and it's quite amazing. Anyway, so here's how we would go about setting this up. So just to kind of give everybody an idea of what indicators are on here, you just go to the studies menu at the top. And we can see here there's an NYSE tick, which is blank right now because it's only 7:30, so there's nothing happening. There's the daily open high low close and the previous open high low close, and then the MPD indicator. That's it. So it's a pretty clean looking chart. There's not a lot of lines. And here's what the lines represent. So these highlighted lines, when I hover over the VWAP in the middle, this is part of the MPD indicator. You can see that what lines are part of the study. So this is the VWAP in the middle. And then this line up here represents the upper extreme of an MPD, or maximum permissible deviation. And this is the lower extreme. And then the blue line is like just a midline. So the blue line is an area that sort of acts as just a visual marker between the VWAP and the upper MPD and the lower MPD. But for more aggressive traders or people who don't mind getting in a little bit early, for example, you can actually use the blue lines as a sort of early entry area. All right, so the people who use MPD lines typically are reversion to the mean sort of counter trend traders. And what that basically means is you're waiting for the market to sort of pierce the lower line and then rally. And there are certain conditions and context in which the market is hitting those lower lines that you want to take into account when you decide to take a counter trend trade. Okay, counter trend trading is not for everybody. All right, but the general idea here is that the wider the lines, the wider the red lines, the wider the range. Okay, and the VWAP, the white line in the middle, in a non-decisive market tends to act as both a magnet and a sort of bouncing off point. And what you'll find in markets, here's the S&P on the left and the NASDAQ on the right. In markets where there isn't a lot of decisiveness, you often will see the market sort of rotate between the MPDs and the VWAP. And then something will send it, sort of through the line in a more dramatic fashion. For example, here on the NASDAQ, and here on the S&P, that's right around the London opening, 2 a.m. Central Time. So, that's not an anomaly. It happens every day, but obviously, but you're more likely to see a more decisive move, right around an open of a major session like that. But after that, things kind of calm down. And I typically start using the MPD lines around 4 a.m. It doesn't mean I'm always sitting here watching it at 4 a.m., but usually I tend to ignore anything that happens before 4, just because there just hasn't been a lot of volume accumulated overnight, usually until about that time. And I feel like there's generally some idea of an accepted range that has been established by both the prior day's US session, the Asian session of that evening, and then the London session. And now we're, approaching the US session. So that's kind of the logic behind that. But what you'll generally find is that in a market that's not very decisive, the market will, sort of make an attempt to pierce those upper MPDs or the lower MPDs and sort of rotate off. And so a a relatively risk averse trader might give it a little breathing room before they consider selling this market. Someone who's a little bit less risk averse might start selling it at the blue line. Someone who has maybe a mid-range risk tolerance might sell it right around the upper red line. And then the idea with this is to give these trades some room to breathe. So if you just kind of look back a little ways, you know, the market could very easily run up to where it was, yesterday during the day, which honestly wasn't that far. I mean, if this is the type of short trade here where if you were to sell that upper MPD line, I would believe that your stop has to be above the previous day's high at least. I mean, that might sound like a lot to some of you who are used to using super tight stops, but that super tight stop style trading is very difficult for most people to do successfully. So the kind of idea this would represent would be a nice wide stop where you're risking maybe $300 to $400 on the trade, and you just let it be. And maybe you come back and check it a couple of hours later and consider moving the stop to break even, or if you really have a lot of patience, you just let it ride until the end of the day and come back and check it at 3 o'clock. You can also access this app, as you may already know, from your phone. So it is relatively easy to manage even if you're on the go. But MPD lines are great in my opinion because they don't change based on the time frame. It's just math, okay? The line values are the same whether you're looking at a 5 minute or a 15 minute or a 30 minute time frame. So it doesn't feel so reactive. The trades feel pre-planned because it doesn't really matter the time frame you're looking at. You're looking at the level. And so you can plan the trade well in advance. Like you could say, okay, as this ES approaches that 31.99, area, I'm going to consider maybe selling one above that. And the only way that I'm going to be wrong on that position really is if we make a new high above yesterday's high. That's a pretty reasonable risk, right? I mean, it's not even that much money. And if you try to sell a rallying market going into all-time highs and you're wrong, well, maybe you kind of deserve what's coming. But it's a reasonable risk, especially since this, even risking it up to 3205, for example, is only a few $100s at the most. So this is the kind of strategy for someone who doesn't like to have a really cluttered screen, doesn't like to use millions of indicators. You like to have a strategy that feels more pre-planned rather than one that is so reactive, where it's like you're watching every second, you're waiting for like the bid volume or the offer volume to flash a certain thing for 1 second, then you got to get in right then and interpret that data and expect yourself to be, at peak performance for 8 straight hours. I mean, that's really, really hard for people to do. So that's the reason I gravitate towards this. It feels simple. It feels like it takes into account daily ranges because the MPD bands are always anchored against the prior day at 5 p.m. Central, and that's how I set them up. And what that means is that the lines are established only based on the activity since the prior night's reopen. So if you have a very volatile evening or a very volatile London session, then the MPD lines coming into the US session will be wide, and that helps you keep things in context in terms of risk. Okay, you can be aware. You're like, okay, we had a really busy evening. There might be a larger propensity to see a dramatic move today. All right, that doesn't mean you can't see a dramatic move even if there was a quiet Asian and European session, but it's just awareness. It's context. It's putting your decisions in the context of what's happened since the prior day, but not before, other than maybe looking at the previous day's high, low, or close. Okay, so this would be like the previous day's high. So again, the studies that are on here, the tick, daily open, high, low, close, previous daily open, high, low, close. What you can do is you add the studies from this list. And then, for example, for the daily open, high, low, close study, if you click on it like this, you get this window. What I usually do is take off the open and the close. So I'm not really paying attention to like today's close because today's close is just the current price. The market hasn't closed yet. So I'll usually remove that. I do like to check this box that shows the values so I can see the values in the y-axis. And I'm basically, for this study, I'm only looking at the high and low for the day, and then you can adjust the colors. And then if you go to the other study here, the previous open, high, low, close, what I usually do is just look at the previous day's high and low. I really am not looking at the previous day's open or close. Okay, it's just because I like to keep the lines clear. I use generally a 5-minute bar so I can kind of see far back enough where I don't necessarily need to be notified by the chart where yesterday's close was, nor do I care all that much. But that's just my way of customizing things. And then I also just adjust the colors a little bit so I can easily differentiate, I usually use more muted colors for the prior day's levels. Okay, so that's how I set that up. And then for the MPD indicator, okay, what I do here is I use the anchor date of the prior night at 5 p.m. Central. So I update this manually every day. I just go in here and just push this arrow up or down like that. Okay, so you just put it to whatever the previous day's date is. And then the anchor time would be your local time for when the open was. So for Central Time, it's 5 p.m. If you're in Eastern Time, it'd be 6 p.m. If you're Mountain Time, it's 4. If you're Pacific, it's 3. Okay, and then you also have the option to show these daily range divided by 2, daily range divided by 4 lines. Okay, that is the red and the blue lines. Okay, so the daily range divided by 2, I check that box. That's what yields this red line, which is up here and down here. And then the daily range divided by 4, that is this box here. That's what yields this blue line and this blue line, and the colors are controlled here. And then the VWAP color is in the middle. Okay, and that is controlled right here. If you want to shade in between everything like this, you can. I find that to be just a tad distracting, so I usually leave that unchecked. But that's really all there is, except for the NYSE tick, which is at the bottom. And the NYSE tick only starts printing at 8:30 Central when the market actually opens up. The only reason I really have that there is because yeah, there's a common, idea about the tick reaching extreme levels, like if it reaches 600, 800, or 1,000, or negative 600, negative 800, or negative 1,000, especially the 1,000 levels. Those are levels that are not usually sustained for very long. So a lot of times counter trend traders will look for the market to be rallying and that tick value to be going way, way up. That is a market that, unless all 4 of the indexes are just cranking new highs at the very same second, that is a market that a lot of times a counter trend trader will sell, because that high tick reading is not usually sustained for very long. So if you see that market really ripping through that upper level, and you see that tick value, that tick reading really going high really quickly, depending on your risk tolerance, you may want to consider a short there if this is something, an idea that you subscribe to. Things to be aware of, and I've talked about this in some of the other videos as well, but when you're looking at selling an index, okay, you really need to look at the context of the other indexes. Okay, if all 4 of the indexes are rallying through a new high and ripping through that upper MPD area line because Trump tweeted something, or because there's an interest rate announcement or something like that, that's not a market you just blindly sell. All right, you want to use this in context, and the best way to do that is to keep an eye on if all the indexes are making that same ripping high at the same time. So if you see the S&P, the Nasdaq, the Russell, and the Dow all just crushing the market, maybe the yen is making a new low, so there's a flight into risk away from quality, so to speak. You got to be careful. Okay, you want to be aware of how these instruments correlate. But if you see like the S&P's down a little bit, the Russell's up, the Dow's kind of flat, the Nasdaq's a little bit down, and one of these markets is kind of acting strange, then that might be a market you consider participating in. So if you see a lot of choppiness and indecision, that doesn't necessarily have to be bad for an intraday trader. Okay, there's a common sort of default attitude about choppy markets that they're bad. Yeah, trend following, traders who can master the ability to follow a trend for, 1 or 2 or 3 straight days or a week, God bless them. I just don't run into them all that often. More often than not, people see the trends way after they've happened, and it's really, really hard for the average person to catch it. But we do see a lot of general interest in counter trend trading, and there's a smart way to do it, and in our opinion, and there is kind of a silly way. Okay, the silly way is to just blindly sell the top or buy the bottom without any kind of context, without any kind of thought about position sizing or risk, and that can get you in trouble. Okay, again, counter trend trading is not for everybody. If the bottom falls out of this thing and you're long, you have to have a point at which you're saying, okay, I'm through. All right, but don't necessarily be afraid of trading a choppy market just because it's choppy. There are strategies like this that can be applied to markets that are not necessarily trending in one direction the entire day. Okay, so something to think about. We've been getting a lot of idea or questions lately about actual trade strategies and ideas. People love the platform. They love the mechanics. They love our software, and they love the fact that we've been around as long as we have, and that how stable everything is. And these are all great things, but we understand that people are also looking for some relevant ideas. One of the great parts about getting information from us is that we just want people to trade here. We're not selling this idea. It's not for sale. It's not an indicator you have to buy from us. It's just something that we think a lot of our customers might be able to benefit from, especially those who are, sort of lacking direction, or people who just want to incorporate it in what they're already doing. So I hope you enjoyed it. I hope it's valuable. I really would like to talk more about this, and a lot of times these videos are prompted by questions that I get, so please feel free to send them. My email address, everybody's got it, I'm sure. It's in the emails we send out, and I'll put it in the text box as well on the YouTube channel. Please reach out and let us know if you're interested in learning more, if you have questions, ideas, and don't forget to subscribe to the YouTube channel. That is where we do a lot of our updating. There are some amazing things coming down the pipeline with this program soon. I'm told maybe weeks away. We're making huge strides forward. We're really excited. No one here has ever been more bullish on our offering than we are right at this very moment. It's truly incredible, and we're all really proud of how far this thing has come so quickly. So please stay in touch. Thanks for your interest and your business and your attention and your referrals, and we will hopefully be hearing from you soon. And look for the next update as well. Thank you guys. Bye bye.